Hello everyone, good morning. Welcome back to Finance with Nagendra here. It's Tuesday, August 18th. Let's walk through today's key market updates. First, we will see world markets. The Iran situation escalated meaningfully over the weekend, and it's the dominant story again today. Over the weekend, Iran called on US to accept defeat, while President Trump called Tehran evil and told Americans to prepare for continued high oil prices. This is genuinely harsher rhetoric than the blockade threat news we covered yesterday, and markets are reacting accordingly. In a related development, Trump also scaled back US South Korea military drills after Seoul declined to back the Iran denuclearization campaign. A reminder that this conflict ripple effects are broadening beyond the Middle East. Against this backdrop, Wall Street fell on Monday. The S&P 500 dropped 0.252%, Nasdaq eased by 0.32%, and the Dow was roughly flat. Yields, oil, and volatility all rose together, a classic risk-off combination. As investors also digested Friday's surprise retail sales miss while awaiting this week's Walmart earnings and Fed meeting minutes. Europe also closed lower Monday. FTSE fell 0.28%, CSE dropped a sharper 0.67%, and DAX declined by 0.39%. In Asia this morning, the reaction is sharper still. Japan's Nikkei is down a full 1.54%. It's worst showing in a while Hang Seng is down 0.74% and Straits Times is down 1.03%. Korea's Kospi is a rare exception, essentially flat. The real headline number, though, is crude oil crossing $91 a barrel. Brent is now trading at 91.1, meaningfully higher than the 87 to 89 range we discussed just a few days ago. This is a genuine, sustained move, not a one-day spike, and it's the clearest signal yet that markets are pricing in a longer, more serious disruption than initially expected. Gold slipped slightly to 4402, down 0.31%, somewhat counterintuitive given the risk-off mode, suggesting some profit-taking after recent gains. The US 10-year Treasury yield climbed to 4.73%, its highest level in our recent tracking, reflecting building inflation concerns tied directly to the oil spike. On Indian ADRs, the picture is genuinely concerning for IT. Infosys ADR fell a sharp 3.89% with HDFC Bank, ICICI Bank, and Dr. Reddy's ADR all in the red too. Axis Bank ADR was a lone gainer, up 1.41%. So what's the world market verdict? It's clearly negative today. This is not a mixed or partial risk-off session. Equities fell across the US, Europe, and most of Asia. Yields and oil both rose together, and the underlying trigger, escalating war rhetoric, is unambiguous. Expect this to weigh directly on India's open. Let us see the key news and data. What's moving the markets today? First, the most important, crude oil crossing $91 changes the calculus. This is no longer a will it, won't it geopolitical risk premium. It's a sustained repricing. Expect intensified pressure on OMCs, aviation, paints, and tires. With the rupee already at 95.61 against the dollar, its weakest level in our recent coverage, likely to weaken further if oil holds these levels. ONGC and Oil India remain the structural beneficiaries. Second, IT is under real pressure, both from Infosys ADR's sharp fall and Monday's around 2% drop in Nifty IT index. This looks like a genuine sector-specific concern, building not just noise. Worth flagging to the viewers. Third, broader geopolitical realignment is underway. The Saudi Arabia-Pakistan-Turkey defense agreement, which Trump called a big, bold, and important first step, alongside the US-South Korea drill scale-back, suggests alliances are shifting in response to the ongoing conflict. While not directly market moving for India today, this is useful context for understanding why the situation feels less contained than a typical regional fare. Fourth, this week's US catalysts remain in play. Walmart's earnings, a key read on US consumer health after Friday's weak retail sales. and Fed's meeting minutes are both due this week, alongside continuing volatility from the Iran situation. Indian markets. Let's see the Indian markets today's outlook. Monday was a rough session for Indian markets, extending last week's caution. Sensex fell 0.36%, Nifty declined 0.32%, slipping firmly below 24,300 mark. IT stocks were the biggest drag, falling nearly 2%, alongside FMCG weakness. While metal and realty were the standout gainers. Hindalco led the Sensex, Infosys was the biggest loser. The broader market held up better than the headline indices, with Nifty mid-cap up by 0.05% and small-cap 0.36%. India VIX settled at 11.3, still relatively subdued despite the session's weakness. Technically, analysts describe Nifty's weekly chart as having formed a false breakout pattern. Last week's push toward 24,500, 24,600 failed to hold, and this week's negative candle confirms that rejection. The broader trend of higher lows over recent months is still intact, but further weakness could drag the index toward 24,200 or 24,000. Given today's clearly negative global cues, expect a weak, cautious open with IT and oil-sensitive sectors likely to lead the downside. What are the sectors to watch? It is IT, OMCs, aviation, paints and tires, upstream oil and gas, metal, realty, and FMCG. And what are the companies in the limelight today? Infosys, Hindalco, Reliance Industries, Dr. Reddy, GMR Airports, PB Fintech, Voltas, BML, Avindo Parma, Indomim, Crescenda, Indrani Biotech, Mahan Industries, Silverline Technologies, Starbeam Ventures, and we have some ex-dividend also today to watch. Let us see the FII activity for Monday, August 17th. FII has genuinely a large single day outflow. Net sellers they sold around 2,535 crores, 2,535 crores, while DIIs are net buyers, an equally large offsetting inflow by buying 5,101 crores. This is one of the more dramatic institutional tug of war days we have seen recently. FIIs sold heavily as the Iran situation escalated, and DIIs observed essentially all of it and then some. This is a genuinely important pattern to explain. When geopolitical shocks hit, FIIs tend to de-risk quickly, while DIIs, backed by steady domestic SIP flow, provide the stabilizing counterweight. It's worth noting that FIIs had pumped a strong 16,621 crore into Indian equities in the first half of August. So, Monday's outflow, while large, comes against a backdrop of otherwise improving foreign sentiment this month, not a resumption of earlier year selling trend. And we'll see the Nifty trades after today. Gift Nifty is trading around 24,298, down by 77 points when I saw this around 8 o'clock in the morning. Continuing directly from Monday's weakness, this fully aligns with our negative world markets read from section 1. There is no divergence today. Global cues, Asian markets and Gift Nifty all are pointing the same direction. Nifty trend summary. The index closed at 24,287, now clearly below 24,300 psychological level, with a weekly chart showing a rejected breakout attempt. Sensex remained above its 50-day EMA but below 200-day EMA, keeping the near-term structure range-bound with a cautious bias. RSI at 53 shows momentum has moderated but is not yet bearish. What are the support and resistance for intraday? Immediate resistance for Nifty would be around 24,500. A break above would be needed to negate the current weak setup. And immediate support is at 24,200 to 24,000 zone. For technical desk, as the next meaningful support if weakness persists. What are the zones to watch today? With Gift Nifty already signaling a weak open, watch whether the index can hold above 24,200. A break below would confirm the technical desk's warning of further slippage towards 24,000. A bounce back above 24,500 would be needed to meaningfully improve the picture, but given today's global cues, this looks unlikely in the near term without a positive Iran-related headline. A buy and dips approach near key supports remains the analyst's preferred strategy, rather than chasing momentum in either direction, given the range-bound cautious structure both Sensex and Nifty are showing. What are the event risks today? With crude oil's fresh move past like $91 and no sign of Iran-US resolution, expect continued pressure on oil-sensitive and IT sectors to dominate the session. Beyond the macro overhang, keep an eye on smaller cap Q1 results due today and any follow-through in Monday's metal or realty outperformance. That's your complete pre-market brief for August 18th. The Iran situation has clearly escalated. Crude's move past $91 is genuine development rather than noise, and today's global cues are unambiguously negative. Trade cautiously, keep position sizes conservative given the elevated uncertainty, and I'll see you in the next video.
वीडियोस बनाने हैं, फिल्मोरा है ना।